The potential risk right now has never been higher, even with the volatility being shorted by the Fed. Admittedly, the VIX index is still relatively high. In fact, it has never been this elevated while stocks have been up to such a degree, and we are constantly hitting new highs in the markets, and it doesn't seem to be stopping anytime soon. More and more easy money is flowing in, and no news about massive layoffs, bankruptcies, and massive unpaid bills piling up seems to change investor behavior. You came here for the truth, so let me unveil that for you. You know when I get the raincoat on, it's time to get serious. Well, that's what this video is about. The Federal Reserve's own admissions for what they see could potentially come. We don't know what's happening, of course, under the hood, but we can absolutely piece the puzzle together and it starts to make a lot of sense. I'm going to show you what the Federal Reserve said here related to asset prices, of course, as related to the bankruptcies and defaults and all of that business. We're looking at commercial real estate and the effects of that. We're looking at interest rates and easy money policies. I want to show you what's going on economically as well. There's a lot of detail I need to cover, so let's begin. US still faces possible default wave and asset declines. That's according to the Federal Reserve themselves. The United States may still face a wave of debt defaults, and check out, this is their wording here, significant declines in asset prices because of the current recession. Now that's the Fed saying it. Of course, I have shown you on many occasions through many different indicators where we have the terrible scenario that's going on with the economy, but the stock market itself is so red hot that it has gone far beyond the expectations of any that are looking at these markets today, whether it's coming from the technical analysis to the macro, it doesn't matter. It is just so absurd, and that of course presents itself in a particular problem when it goes to these elevated levels with no justification for doing so. Ultimately, there are corrections that take place, but what actually pops the bubble, we don't know. We know how that took place in previous events. It's very difficult to be able to be sure about what happens in the future, but I know something. The higher it goes, the farther it will actually decline in the end. As you see what happened throughout history, you know, the waves are sort of like this, and then it becomes more exaggerated all the time. And each time the Federal Reserve intervenes, they make it worse. Look, I like the reports of the Fed. I like the reports of the IMF. It doesn't mean that I have to agree with their actions on a daily basis. They've got these economists working, generating these reports all the time. They've got nothing to do with the other side of their business that runs to obviously profit the elite. This is a whole different story. They've got so much data and it's always coming in. It's like when you have a Bloomberg terminal, the Bloomberg terminal can pull data that you just can't not find on searching online and so on. So when you have access to other information, you've got to use it. And the Federal Reserve is definitely one of those sources. As many households continue to struggle, loan defaults may rise, leading to material losses for lenders. That's according to the Fed themselves. Another quote here, business debt has risen sharply. We're talking about corporate debt being such a big problem. Remember all the BBB rated debt, all of the fallen angels and so on, things that I've been talking about for a while. Business debt has risen sharply as businesses increase borrowing to weather the period of weak earnings. The general decline in revenues associated with the severe reduction in economic activity has weakened the ability of businesses to service these obligations. You've got revenue coming in on a normal basis, and of course that pays off your debt. All these companies, they've got this debt, but suddenly the money doesn't come in the way it was before. Maybe they're making no revenue or very little revenue, and of course that presents a problem for the debt itself. Now, this debt needs to be paid back. They might have to restructure that debt. They might have to figure out what to do with the lenders, but then that puts additional pressure on the lender. The lender needs to somehow get paid. Well, what are they going to do? They're going to write off half of that debt. It's not very good for a lot of these companies in the long-term scenario if people are not paying back. And truthfully, there are many that are in that category today. Asset prices remain vulnerable to significant declines should investor risk sentiment fall or the economic recovery weaken. Here, they're basically just talking about how all of the programs that they have put in place, whether it's the moratoriums, whether it is the Federal Reserve with the stimulus, whether it's coming with the government stimulus, this is what has allowed this whole scenario to continue. Without that, there would be significant declines. That's why there was such a push to get this stimulus in. Are we going to get it in? Are we going to get it in? The market came down probably like 2 days out of the last 50 because of this scenario. And oh my goodness, are they not going to agree upon stimulus? Of course they will at some point. Who knows what the size is, and who knows we'll actually get some of that. But regardless, that's what they're talking about today. In the first paragraph here, they're actually suggesting that, the banks have been so much better than they were during the financial crisis. They remain well capitalized. We heard that story in 2006 and 2007. Even the Federal Reserve back in 2008 was telling you that the financial system was robust. And of course, we knew that whole time that absolutely wasn't the case, but here they are again today telling you that, so I'm not sure how trustworthy that is. And then you look right here in this paragraph where it says the Fed noted that real estate market is showing signs of strain as vacancy rates rise and rent growth slows or turns negative. About 7% of home mortgage holders are behind on payments compared to around 5% before the situation occurred here in 2020, though most are in forbearance programs with their lenders. And this is something that only delays the inevitable. It's not salvation. It's not a fix. It's not a write-off. This is something that they have to pay back. And it's going to be some balloon payment. Are they going to pay extra interest on it? I don't know all the terms and the regulations that are surrounding each person and where they live and so on. But certainly somebody's got to be paid. There's debt somewhere. And if it doesn't get it, well, then somebody's got to take the hit. And when that happens, that company, that person, that business ultimately has to suffer, and then the cascade begins. Right now, this is all a bandage. It's a band-aid that's being put over to try and fix this, but it is much, much worse than they are willing to admit. And I'm really glad that at least the Federal Reserve has whitewashed it, but had it sort of made better than it seems. I'm glad that there's at least just data surrounding it. Among small businesses, credit quality has worsened notably since the beginning, not yet stabilized. Many small businesses closing or scaling back operations significantly during the crisis. Northman Trader had this to say: in 2020, I learned that you can have negative earnings growth, a shrinking economy, several 100,000 dead, high unemployment, and markets will still make record highs because the Fed said so. The Federal Reserve themselves have talked about it. I just mentioned it recently, how the former Fed president actually said our actions, the low interest rates, easy money, he used that word, easy money, and of course the quantitative easing have pushed these prices higher. They are admitting it because it is so clear, it is so obvious. You're not going to get somebody sitting there right now, Jerome Powell, for instance, that talks about that, but as they move through, you might hear some truth coming out, and there's no denying it. Now, is that a good thing? Do you actually want the Federal Reserve to be printing up money out of thin air and buying assets? That is a very, very dangerous policy, but of course one they will continue to pursue. Walt Disney said on Monday that it was furloughing additional workers from its Disneyland theme park in California because it still does not know when the state will allow it to reopen. This is unbelievable. There's a lot of people that work for this company here, and they're getting hit hard. The number of furloughs, which include executive, salaried, and hourly workers, was not known. It comes on top. That's the key here. On top of the 28,000 employees who were laid off in September. Big time, big time. A lot of companies that were supposedly, everything was supposed to be fine by now. But here we are months and months and months later, and people are still getting laid off. Gas prices have hit a new milestone that is sure to save you money. Prices at the pump are the lowest they have been since 2004. The national average, of course, we're talking about the US here, for a gallon of regular gas is $2.11. I have to actually ask the subscribers right now, what are you seeing around? Is it $2.11 where you are? Where is it? Depending on where you are, is it higher, is it lower, and so on. I did a video just recently and I asked about lumber. What are you seeing with lumber prices? You have to see the comments on this video. It's the one with Warren Buffett. And there were so many excellent responses, people from all over. This is like crowdsourced. This is so good because people are giving information, and I just appreciate your comments so much. You have no idea. We all can learn from the comment section here. It's some seriously fantastic people, but I digress. This is interesting, right? They're talking about how you can save money, how you should be saving money. And is that the case? Well, look at this. This happens to be, I believe I pulled up New York, and you could see that at this time, we're off the bottoms. By the way, this is TomTom's traffic report that they have. They have a traffic index. You can get it by just searching TomTom, TOM, and then you type in the name of the city and you should be able to pull it up. But this is where we were prior to. This is at the beginning of the year, and obviously it came down significantly since then. And you could see the amount of congestion on the roads is still down significantly from where we were earlier in the year. That's most likely the case for a lot of places. If you look at it, compare them. It might be hard to see on this chart here, but it just goes by week, and you can go through 1, 2, 3, 4 all the way through. And look, the dark red circles here, that's where the heavier congestion was. And we are moving closer into that sort of territory today, but still it's off from its peak. So really, are these people saving money? The lowest gasoline prices, but you don't have anywhere to go. A little bit of humor here. Leaked document reveals Nikola flip-flopped on whether it would spend any of its $17 million of customer deposits to fund the Nikola 1. This was interesting because this company here, apparently, from what I'm hearing, they had taken deposits just like Tesla would do. We're going to make this vehicle. You give us the deposits. Then they just use that money, not as the deposit holding there. No. They used it because they were having some problem with the revenue and so on. Well, this is the way it works with these companies. There's not much more than an idea. There aren't these cars going, abound everywhere. They need more and more and more revenue coming in because their system that they've built, the model that they've built, ultimately is not yet functional. It's not yet profitable. That, it could be okay, but they should be more transparent about that. And of course, here they might be in big trouble. I'm actively following this one. The article is actually from a few days ago, but I wanted to bring it up and make it clear what's happening here as I go through this in the coming days and weeks, because the issues that are going on between Australia and China, I think, look like they're escalating. Take a look. Australia calls for China to play by the rules after reports of multi-billion-dollar trade bans. Trade Minister says businesses need clarity after reports many Australian exports will be stopped at customs from Friday. So I want to look into this in more detail as I find the information out. This is definitely not the time when these two sides need to be escalating any tensions. That's for sure. Look for some more information on this from me in the coming days and weeks. I told you that I would show you opportunities in the information that I'm finding out here, and this is one that I did not foresee, I'm telling you right now, but jigsaw puzzles apparently have become a favorite pastime right now, and they actually say, quote, "There's not a factory on the planet that is not months behind on production. This could have been an easy sell. The profitability here is very high, and unfortunately, I didn't even think that was going to be the case, but here we are today. today. So I just wanted to bring that to you, just give you some insight as when there is an issue happening, there are always going to be opportunities, and it doesn't mean that you have to take advantage of a bad scenario. It means you are providing a service or a product or someone that customers want. And we are definitely seeing some companies that are doing that today. Just wanted to end off with this. Janet Yellen, maybe it could be, we'll see what happens, could potentially be the Treasury Secretary. I am so excited for that. You know it if you've been here on the channel for a while, how much we all love Janet. Negative interest rates are fantastic. Yellen. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. And if you want to learn how to sell stuff online, e-commerce, all of this stuff is available for you for free at my e-course, the AmazonGPS.com. I've got so much data, so many things that are covered in my 2 books, and I made it so easy to understand, unlike all that other stuff that's out there. Check them out in the link in the description. And if you want the audiobook instead, it's available at themoneygps.com. But wait a minute, you can't go anywhere. Don't go anywhere. Check out this video. So much stuff in here you haven't seen before it. If you haven't seen this before, you definitely want to click it. I'll see you there.